Hello friends, in today's educational video that I have prepared, we will learn how to trade successfully without using any indicators, what methods can be used, and especially how to neutralize the trap movements set by large capital institutions, individuals, and even stock market bots for small investors. In this video, I will show you two different trading methods without using any indicators. This video is a very special training video, and although the trading model we will implement may seem a bit challenging when you first watch it, you will see how understandable it is after watching it carefully a few times. Before we start the training, please don't forget to subscribe and hit the like button. Let's get started. As you can see in our first example, there is an upward trend, and the price continues to rise without any interruptions, of course. This upward movement creates lower levels along the way. Taking all these lower levels into consideration, we draw a trend line and also draw a support line at the most recent lower level. If the price continues to move upward, while adhering to the trend line, we will revise our lines accordingly. No, the price has crossed the upward trend line in a downward direction, and it is highly likely that the upward trend has been broken, however. To determine if this trend has indeed come to an end, and whether this downward breakout movement is a trap, we need the horizontal support line we drew to be broken in a downward direction, and this breakdown is also occurring. And the trade we opened, taking all precautions, has been successful. Please remember that there is always a guarantee of minimal loss and maximum profit by exercising patience and adhering to the rules, but there is never a 100% guarantee of success in every trade. Now let's apply a different trading method. Please pay close attention, as this trading model is different from the previous one. As you can see in this example, the price is continuously generating new lower levels and decreasing. And then, as the influence of the buyer group begins to be felt in the market, the series of declines slowly transitions into a sideways market condition. And as you can see, the price is once again establishing a new peak level. Now it is time to monitor the market with the intention of entering a long position, and it is necessary to move away from the idea of a short position. During its sideways movements, the price has formed a strong support zone marked by the yellow rectangle. Despite being tested 3 times, this zone has not been broken in a downward direction. In such situations, the seller group tends to become hesitant in the market, and the selling pressure can weaken. Of course, in order to enter a long position, there should be a resistance line that we expect to be broken. Without the break of this line, it would not be possible to talk about a new upward trend. Right here, in the area I marked. As I mentioned at the beginning of the video, the market makers, who are large capital holders, trap the small investors by creating a resistance zone to liquidate them. And here, investors to open long positions, thinking that it is a genuine breakout, encounter significant losses. After the trap breakout, the price sharply reverses back into the sideways range, liquidating many inexperienced traders. Later, the resistance line is broken again, creating an opportunity to open a favorable trade. So, how can we protect ourselves from this situation? This is why, in each of my videos, I advise drawing an additional resistance or support line along with a valid pullback that occurs after a breakout. If this additional support or resistance line is also broken, it strengthens the indication that the trend has reversed. Remember that the breaking of resistance lines may not always follow this pattern. At times, even large capital holders can enter or exit trades within the natural flow of the market. By following our videos, you will gain more experience and learn to avoid harmful trades. Until next time, goodbye.